Hey, it's Similolu here, and in this video I'm going to show you how I use trend lines in my day-to-day trading. Now, if you don't know what a trend line is, or you just have a sketchy idea of what it is, or you've been using trend lines but you haven't really gotten any positive results from using them, this is the video for you. I will take you through the whys, the hows, and the whens of using trend lines. So let's get right into it. So what exactly is a trend line? A trend line is simply a straight line that connects two or more price points and then extends into the future. So now let's move over to the screen so I can show you what a trend line looks like and how you can actually draw your own trend lines. This blue line is a trend line, and what it is it shows you both the top limit, and when you draw a bottom trend line, it shows you the bottom limits to which price action is moving over a period of time, and helps you create a trading plan. It helps you keep to a trading plan, and ultimately it helps you create more consistent profits. So in this instance, we have a top trend line, and it's basically marking the swing highs. So we have this price action on Google. It swung high up here at this point, swung high at this point. Here's another point, another one, another one. Now let's draw the bottom trend line. So for the bottom trend line, we're going to look for those areas where price action came all the way down to the swing low points. We call these low points the swing lows. And we're going to try our best to connect them with as many touches as possible. So what I mean by as many touches as possible is I'll pull up my trend line, and if I draw it just from here to here, well, I've only got 2 touches, and that does make a trend line. But what makes a stronger trend line is one that has even more touches. So let's see if I can attempt to create more than 2 touches. That's a 3rd touch. Or we could call this the 3rd touch. After a while, you'll become skilled in knowing exactly where you want to put your trend lines. I would rather put it further up where I'm touching the bottom of these 2 green candles. So once I have my trend line drawn where it's touching 3 candles, I now extend it to the right, and of course I prefer my trend lines to be blue, and here we have our bottom trend line. We now have both the upper trend line and the lower trend line, and we have price action oscillating up and down within the boundaries of these 2 trend lines. So the next thing we're going to go into is how to use these trend lines to help us trade our trading plan and help us ultimately be more profitable in our trading. Now I'm going to show you how to use these trend lines in your day-to-day trading. We can see this decrease in price action down to the point where it got to the bottom trend line but just ricocheted right off it. This would be a point at which to enter into a long position trade. Now you can see what happened over the next few days. 1, 2, 3, 4, 5, 6, 7, 8. We've got like 2 to 3 weeks of increasing price action. So anything you bought at this point, where Google's 1165, you would have a $200 increase, about a $200 increase just coming into the trade at this point and even exiting at any point in this upward motion. Now, going further along the trend line, we see another point at which price action came down all the way to the bottom trend line, and the next couple of days we can see that increase in price action. At this point, you can see that price action went all the way from the bottom trend line to the top trend line, literally overnight. Once you're in a trade, and I'll use this area as an example, once you get into a trade at this point, and once you've got some profit, you probably want to come out of your trades as price action edges closer to the upper trend line. Because once price action gets to the top trend line, there is a greater chance for price action to retrace back downwards. This is basically how I use trend lines to inform my trading. It helps me enter into trades at the appropriate times when price action is closer to my lower trend line, and then it helps me exit the trades more often than not before price action even gets to the top trend line. Now, a trend stays a trend until the trend is broken. So we can see the trend here is for price action to stay in between these two bands. But it can get to a point where price action actually breaks out of the trend. This would happen if price action closes above the upper Bollinger, outside of the confines of the two bands. Then there is a possibility for there to be a breakout where price action continues upward. So here we have a good example of a breakout where price action is oscillating between these two trend lines, and then we have this one candlestick that breaks out and closes above the trend line, and you can see what happens from then on. Price action continued up. The converse is the case when price action drops below the lower trend line. And as you can see here, with this candle, first it gapped down and then it closed below the lower trend line, and as you can see, price action continued down. I hope you're able to incorporate it into your day-to-day trading. Let me know if you have any particular topics that you would like to see me cover. Hit the like button and don't forget to subscribe. Your subscription helps small channels like mine rank better on YouTube. Oh, and don't forget to hit that bell, and I'll see you on the next video.